Good evening, guys. How are you doing tonight? Really glad to have you to the show. Now, what we're going to talk about tonight is there's a new trade war going on. Yeah. Trump tonight announced he's going to hit the Chinese with $100 billion more in this escalating trade war. Now, we've heard reports from the media saying that the reason why this trade war is happening is because of intellectual secrets and stuff from China. China is like, I'll tell you what I think. On the 26th of March, China started trading oil futures in yuan oil futures on the 26th of March. And this threatens to destroy the petrodollar. Now, we know that any other country that's ever threatened to these are crude futures contracts traded in Shanghai on March 26th. Okay, that's not very long ago, March 26th. This is just a few days ago. Now, we know that any other country that's tried to trade oil in anything but dollars, has been attacked. They cannot fly in and drop bombs on China. Because China's a nuclear country and China would attack them back. And so they've always bullied their way in being able to stop any country who threatens the dominance of the petrodollar. China is now directly threatening the dominance of the petrodollar. And suddenly we see them dropping trade war bombs on China in a trade war. What am I to think? What do you think? Do you think that this is the reason why the United States is going into a trade war against China? Is the Shanghai futures contracts in oil starting to trade on the 26th of March? The dates sure are similar, just slightly after the futures contracts start on the 26th of March, and all of a sudden, boom, bang, bing, America's dropping trade war bombs on China. I personally think that they're trying to get China to kneel and to surrender and to stop with these yuan oil contracts. I think that's what they're trying to do. But I want to tell you, I don't think China is going to yield. I don't think China is going to stop what they planned on doing. I think they've been planning this for a long time. A very concise takedown of the U.S. dollar. I think that this is what all of those little 1 kilogram size Chinese gold bars was all about right now. I think China has it within their power to pull the plug on America. America's saying, okay, we're going to pull the plug on China, but I think China's got it within their power to pull the plug on America. And I think that this whole thing it could turn into a black swan. This could be our black swan. We've been talking about a black swan event coming along for a long time now that could cause a financial crisis. And this could be our black swan. Here's an article. It says China has one major weapon in its arsenal in its trade war against the United States. And this is from the Business Insider. It says the People's Republic of China. China has yet to use its biggest American import government debt against the United States in its trade war over tariffs. China's holding around $1.17 trillion of treasuries as of the end of January, making it the largest of America's foreign debtors. Taking aim at the United States Treasury, treasuries could hurt global investors and financiers and make it more costly to finance the federal government. It says, New York, Reuters. It took China just 11 hours to retaliate against the United States for proposing tariffs on 1,300 Chinese products, but Chinese officials are holding back on taking aim at their largest American import, government debt. In a tit-for-tat response to the Trump administration's plan for 25% duties on 50 billion of Chinese imports. Well, guess what? It's not 50 billion now. It's going to be 100 billion more. And I'm going to tell you something else, too. That's not China's only card up their sleeve. It's not the only ace card that China's holding, is these treasuries. China has another ace card. China is the biggest importer of oil in the world. West Texas has become a monster oil producer. China could use oil as a card. I mean, okay, let's take a look at this, really, seriously. It's very debatable as to which of the two countries, China or the United States, has the largest economy in the world at this point. It's very debatable, seriously. Now, China has an awful lot of problems within their borders. They've built these ghost cities. Quite literally, they have these ghost cities that they've built where there is nobody in them. In fact, the buildings are not even completed. China's been holding the world economy together with their new Belt and Road Initiative. This is what's been holding the world together as of late, is the infrastructure programs that China has promised is keeping the world's markets propped up. This whole thing is actually a dog and pony show. All the world's markets and everything are being propped up by nothing but air in their effort to stop China from tearing the foundations of the petrodollar away. And this is exactly what they're doing by trading these new oil contracts, these yuan oil futures contracts, started on the 26th. They're tearing the moorings out from underneath the petrodollar. The United States just cannot sit back and let China do that because it'll destroy the petrodollar. So they feel like they're between a rock and a hard place, like they don't have anywhere to turn. They either have to try to stop China or let the petrodollar collapse. And it's unthinkable for them to let the petrodollar collapse without trying to do something. And so what they're trying to do is they're trying to force China's hand. But the Chinese people are not going to be forced by having their arm twisted behind their back. It won't work. I can tell you right now. And twisting their arm harder, which is what Trump's doing right now. He's actually got their arm behind their back, and he's going to twist it up even harder, is just going to, they're willing to let him break their arm. Make my day, sort of thing. Like Clint Eastwood, he used to have that big gun aimed at the guy. He said, make my day. China is not going to be coerced. I can tell you right now, into dropping what they're trying to do. They're going to fight back. So you watch. They're going to throw this $100 billion at China in the next few days. $100 billion more of tariffs. And China's going to hit them back with at least $100 billion, maybe more. Right back at you. This is a real black swan. And I'm not exactly sure how profound it could be on the markets. But once the markets start to really slide, this itself can be a self-perpetuating, self-feeding cycle because the markets have been ready to go for a long time. You know, it's not really what I was expecting. I was expecting the markets to kind of float along until the U.S. 10-year benchmark Treasury until it got to 3.25% exactly. And once it passed that, then I was expecting the markets to turn downward rather sharply. But because this situation is coming along, if this continues to escalate, it's going to have an effect on the markets. And because the markets were ready to roll over anyway, it could start a self-feeding, self-perpetuating cycle. Once you take out all these people in the market that are buoying the market up by buying on the dip, and they're honest to Pete, they have been so well trained since the 2008 crisis till now, and all of the money that was put into quantitative easing 1, 2, 3, and Operation Twist, the market was always going up, kind of like a saw blade. A saw blade has a tooth on the saw blade, and then it goes down, then it goes back up, and each time it goes up, it's a little bit higher than the time before. So what they would do is they trained them for like 9 years. It trained these traders to buy on the dip. You make money, you buy on the dip, then it goes up higher than it ever was before. Now, they are well trained, and they're looking for the dip to buy on right now. If the market falls too much, it's going to take those guys out. Those guys are not going to be interested in buying a dip anymore. They're going to be frightened. They're all going to want to go into cash. They're not going to go into Bitcoin. And in the end, the Bitcoin people are going to get frightened too, in the end, when the market gets down low enough. And they're going to want to be in cash. What's that going to do to the dollar? Can we all say deflation? It's only going to get so bad. Deflation itself is a self-perpetuating, self-feeding cycle. It's only going to get so bad before the Federal Reserve and the central banks step in, and they will turn the markets around. When they turn the markets around, then we're going to go from deflation to inflation. See, the trick in understanding all of this is understanding the very careful balance that the central bank has had ever since the financial crisis of 2008. They have had such a, it's almost like a hair trigger on a gun. It's a very, very precarious balance they've had between inflation and deflation. And they've been kind of following that balance, and the Federal Reserve has been playing that. They knew just how much money to inject into the system to not make hyperinflation, and not to allow it to spiral into deflation either, but to just keep us going along that razor's edge ever since 2008 until now. But it's a balancing act. And just like a tightrope walker, when he's walking on the wire, you know, he's balancing. That's what they've been doing. But if all of a sudden you get a crash on one side, it's like throwing him off balance. And then they have to balance so far back to the other side that they lose their balance of the entire system. The balance they've been maintaining from 2008 until now. They lose balance of that whole thing, and it can go either too much into deflation, causes them to lose balance, and then to fix that, they have to go too far the other way, and then they lose balance of the system and they get inflation. Serious inflation. Once that serious inflation starts, that's a cycle that they can't stop. Because if they try to hit it with money to try to stop it, they just make it worse. It's almost like an electrical fire. You cannot put an electrical fire out by putting water on it. It doesn't work. It makes it flare up bigger. And that's the way with this situation with inflation. See, deflation, they can always stop deflation. And that's what we got coming, is a bit of deflation. But if it's seriously bad deflation, they have to hit it with so much money that swings it over to inflation. And once the inflation gets going and it starts to run away, then they can't put that fire out. Because if they try to put it out by putting money on it, they just make it go faster and hotter. And it's awfully hard to deal with it. So anyway, this could be our black swan we've been waiting for a long time. Thank you guys for listening. There's pictures I've been displaying of these ghost cities in China. China could end up being our black swan. Thank you guys for listening. Like and subscribe. We'll catch you in the next show. Bye.